Good evening. This is John and Guillermo, optionstradingpilot.com, coming at you for our weekly update. It is Tuesday night. We just had a holiday 3-day weekend. So we're just going to take a quick look at kind of where we are. What I have up on the screen is the ES, the E-mini S&P Futures. This is the front month. So you can see we've trended down quite a bit, and we had a little up move today up in here, but since the market has closed and then reopened tonight, the futures are struggling a bit. So I'd like to get your thoughts on it, Guillermo. I'm kind of thinking, I looked at the markets today, they were pretty strong. I was mostly in cash. I really wanted to get short again. I put on some wide strangles in Tesla. Still have my real wide oil trade on. I do still have a short on the triple Qs. And as I saw the market go up today, volatility did not go down. And to me, that's somewhat of a tell that one of them is incorrect. Either volatility is going to go down or the market needs to go down. I still think we're in a bear market, and it's possible that today's rally might have been just what it is. It's a bear market rally, and we're continuing on the down slope tomorrow. Another possibility is we get up to this 4,100 level. That's not unreasonable, really, from where we are. I don't see much above that as a target unless something really major happens in the world with Russia, maybe. But again, I don't see much above 4,100. But I'm really more down, thinking that we're going to head down from here. And this was a nice place to get short again. So
yeah, well, I talked, John, if you could go back to 2020 and look at the dailies while I talk, but I was reviewing these bear market rallies, and what's interesting is that you're always thinking, oh my gosh, is this what's going to happen? But when you start to look at the categories that you need in order to really show a reversal, the easy one is you have to have 2 higher lows and 1 higher high, right? That's when you actually see it, not one day. But at the same time, you have to show really strong rejection. And so what I mean by that is the breadth of the market, where most of the stocks, say 90% or plus of the stocks, are showing strength. That's where you want to be. Like today, the puts on Netflix would have been awesome. On Meta, puts would have been awesome. There's several stocks that really did not perform. We had the oil stocks that got hit hard last week bounce again today. So, and the reality is that I know the market's forward looking, so we don't know when it's going to end. But you and I were talking about earlier, I don't know what bank is saying that they see the recession happening in 2023, which puts us out. I mean, that I don't know if people know this, but that's an in between the lines read of saying the market is weak still, because my general opinion is that the market is forward looking about 6 months. So that's why you can have the disconnect between what the economy is doing and what the market is doing. Look, if you go to Ruth Chris, my friend was telling me he went over the weekend to Ruth Chris, and what did they see? Packed. Like that place was packed. But obviously the people that are going there have money. I have other friends that they are struggling. Some restaurants have closed. There's some signs that are showing up. He was telling me that there's a lady that would help feed dogs and pets, and there was like 6 families that she would help out with that, and now it's 50 families they're helping out with that. So we're seeing the underbelly of this, and I think this is the beginning. So I asked you to go to 2020 because 2020 was really bad. That March. And we can see, if you can zoom in that March to April section, what we end up seeing is that there are these bars that look very bullish. You and I like to study the candlestick formations, and when we see that, we're like, oh my God, it's going to go up. But right now, you got to prove it to me. I'm sorry. I'm gonna play the shorts. I'm not gonna play heavy shorts. You and I have a short going the Qs. I think I'm gonna add a future short here. Probably before the London Open. I gotta observe that. I'm gonna set my alarm for that. I think I might do that.
Yeah, make sure you add an extra hour for you now.
Yeah, that's true. That's true. That always messes me up. 3 a.m., right? 3 a.m. East Coast time.
So, you know, it's real interesting. Here's 2020 right
Yep.
here, right at the peak of COVID, let's call it, or the beginning of COVID. I don't know.
Yeah.
But and how nice trend, a little bit of weakness here, right? And then really, and you did see starting to see a lot of weakness in 2021,
Yeah.
but it was muted because the few tech stocks that are in a lot that really control a lot of the indexes didn't go down. Now you got the Metas and the Googles and the Apples right here. Look at this one, right when it's starting to cross right here. And we've been in cash mostly for most of this year. And this is where the well, Meta now, but all these high techs really started to suffer, Amazons and things.
Right.
Yeah, I think this is a weekly chart. So, you know, at each tick I move is a big it's
a week, right?
A big week. So, you know, all we're talking about here is this last little green line. And if you look at it in the bigger scope of things, it doesn't mean that much.
It really doesn't. So that's the clarity. And here's what's interesting. Talking to a couple clients, a couple friends, and one of them, you know, he sounded frustrated because they're like, well, aren't you supposed to make money? And I told him, sometimes the best way to make money is to conserve the cash that you have. So we've been sitting in cash for a while. Day trading, I think my favorite play right now, I know you're playing the Tesla weeklies, which, you know, more power to you. I'm not going to do that right now, but I've been scalping a lot. I actually took a pre-market order and pretty much closed it right after the market opened because I wanted to stay out, and it was good. It was good money for me. So overall, I think for our listeners right now is like, there are opportunities out there to take. And so don't despair. Just it's not one of those markets where you can go all in and really go heavy with things. But there's still money to be made. There's still movements that you can observe that are really nice. So, you know, as of right now, you and I think Powell speaks right at open. There shouldn't be anything new that he's going to say. So it's not an official Fed meeting, if from what I remember. But you know, you were mentioning the 4,100. I think the sticking point right now is 3,800 or so on the ES. And I mean, you can see where are you? Come back to the future, to the present. Go back to the future, John.
Where do you want me to go?
Yeah, go to the present. And I just want to show you where I'm picking up that 3,800 number.
Okay. You want to see 10 minutes?
Just daily bars. I think daily bars are good.
There's the daily, and then today.
Yeah. So if you go to your left about, let's say right before on the next dip, a little more over. Yeah. A little more over. It's probably like 10 candles over. Yeah. You see more, a little bit more over, like 3 or 4 candles. Yeah. You see that? That is, I know it is saying open 3,900, but the close is like 39. The bottom of those candles is serving as a level of resistance. And so, and we have 2 gaps, you know, I'm sorry, I'm not showing my screen, but we have 2 gaps that the bulls have to contend with. And if you look at the profile as far as volume from here down, it's pretty thin. So, you know, we went up so fast, John, that I know traders like and investors in big hedge fund management, they want full volume profile on the way up. And we went up so fast in 2020 and part of 2021 that those have to get filled. So I think we have a lot more downside here. And I'm going to speak a little bit in economic terms. So our our economy, when we shut down, and I'm just going to use round numbers, I'm going to give half a trillion here and there. Okay. Give me half a trillion here and there, John.
Okay.
But I think our economy is like around $21 trillion per year in production. And we shut down, I think at the beginning it was 4 weeks. So you just divide that by 12 and then more than that, obviously. So in essence, we lost something like, I don't know, $5 trillion from the beginning of the market. And so then the Fed came in and punched it in. Here's what people don't know. When the Fed gives you money, that's a one-time thing. It's not like you created a company, it's a going concern where it makes money all the time. This is a one-time thing. So that money came into the market like strong, but that was once, just buy. It's just so continuous for so long, but that's not coming out of nowhere. And the way markets go up, John, you and I both have studied this, is that we need new money. We need new wealth. We need people in their 401k plans, people working, getting the money, and then going out and buying stock to invest. And I'm sorry, like when you inflate prices, how we have, like you have to revisit the prices below that were really passed over too quickly.
Mhm.
Right?
I agree. And since the depths of COVID, other than this year, it's been pretty straight up. And so, I think we're, and I don't mind a little two-sided action, really.
Mhm.
We've had some down days where you and I have been short, but you can only be short for so long where you mechanically you take off your shorts and then you short again, and then you short again, and you go, well, I can't keep shorting. I mean, I can, but my odds, my probability of success are getting lower and lower. So it's nice to have a big push up. Unfortunately, when the market's up 2.5%, 3% right at the open, it's very hard to do much more during that time in that day. But I viewed at the end of close today as a really good entry point again for another down move. And and I'm not saying it's going to crash or anything else, but it's I think we're on a more than gentle downslope on the markets.
Yeah, I think you're dead on that, and you and I have both expressed that it's hard to continue to get bearish and take these puts or these bear calls, because the action on the downside is usually way faster than the upside. And so once you've seen it and you've won, like you and I have won what, 3 weeks straight, something crazy like that on the downside.
Yeah, and I wanted to throw up the SPX here. This is again a daily chart for 4 months, very similar looking. And so we haven't had this is the but you can see, right? We're getting a little bit of up and then down and up and down, but we're still really under the trend lines.
Yeah.
And now like I know you and I have been doing the SPX, and those are a lot of fun to trade, and they're not really too expensive.
No.
Even if you're going to go out to do well, the markets are closed. Well, yeah, this SPX is closed right now.
Yeah, it's closed right now. So,
but anyway, you can get pretty wide and it doesn't cost too much, but you get things like Tesla,
right.
And for the week, and here's your 600 at 5 delta, paying $1.52, and over here 4 or 5 delta for the 815s. Okay, it's paying 2.25 or so. But look at buying power reduction, it's 25 grand to put
that kills you, yeah.
So nice premium, and this is just for 4 days.
Right.
But the way that Tesla moves 60 points and it can go up or down. So I think there's more efficient ways to do it. ES is one of my favorite, I think probably one of your favorite places to go to do those types of trades, wouldn't you say?
Yeah. Oh yeah, absolutely. Yeah, I trade a lot of the ES NQs and then SPY calls and puts and QQQs calls and puts, and mainly a lot now right now NQ, just because a lot of movement, but I'm thinking about doing RTY, Russell 2000, short instead of that NQ that I mentioned earlier, but I'll have to take a look. I might have to set my alarm to get up and see what London does at 3 in the morning. So anyway, I really think that we're gonna head down here for the end of the week. If you could take some cheap, puts on the Qs, just a little bit out of the money, I would place them at 10 to 15 delta, maybe 15, 20 delta. If you don't want to be selling, if you don't have the ability to sell premium, which by the way, it's a higher probability play is to sell calls as opposed to buying puts. But if you get into see the price on that, you'll be paying $86 for that 270 on June 24th for the puts.
Oh,
Now that's 3 days out. I would probably have to go out a little bit more just because tomorrow might be crazy, John.
Yeah.
So
Yeah.
I'm thinking we go out to Friday or July 1st or something. You have to pay more for that, but get something out of the money on the puts. And if you could sell premium, that's probably preferable to me. The expected move in that time frame is 13 points. So sell something at like 294, 295. That's not bad. That's not bad. You're getting paid 205. That's a really nice ratio right there, John. You can get a little more aggressive on that front. So overall, I think if we, stay bearish, don't go heavy, play out of the money puts, sell calls if your account allows you to, then I think that's the move. I think that what we're seeing here is unprecedented. I think that this is the first time in a long time that we see the Fed, they don't have the bullets, right? The bullets would be, let's drop interest rates, but we cannot do that. We're fighting the invisible enemy of inflation. And cash, even though you're losing money on inflation, is still better than being out there investing, right?
Exactly. So, and here's a idea, you can go here and just sell the call if you have that amount. Your buying power is 4,200 to make 184.
Yep.
It has an unlimited loss. Your max profit is 184. You could always come and do something like that.
Yeah.
Now your buying powers, but now your max loss is 418. Your profit's a lot lower. But you could always move these things in a little bit.
You can do 10 of those, John, for the price of that one that you sold, and you're at $820 ticket that you can gain there, which is not bad.
There's always if you look at this probability of profit a little bit closer, you can move that out like where we were. Your probability of profit is 80%, so it starts to, and then if you want to do that, it's a little bit more. Again, you have to look at your risk tolerance and what level of option trading you have. There's a lot of I think there's a lot of play here, and these moved quite a bit. And look at the bid ask. Well, the bid ask is just a few cents. It's not open, but it's only a few cents. Right. Really nice volume, almost at every strike. So
that's not bad. Yeah, except for today. Today was tough just because we didn't get a big move during the day. The big move happened overnight. But this has been definitely a trader's market. If you're a trader and you know how to trade. Oh, I see little kitty back there.
Oh, really?
Yeah, trader's market, right? And so this has really been profitable for us at this point. So come join us, come see us, Options Trading Pilot, and see what we're doing.
Yeah, that's great. All right, Guillermo, we'll sign off for tonight, and I think we'll get a few trades on maybe in the futures market in the middle of the night.
You got it, man.
All right, take it easy.
Bye.